Welcome back to COINCHECK. I'm Abhishek and you're watching 3.0 TV. Today we are updating Plasma or the token XPL, the new stablecoin native layer 1 that exploded off launch day. Fast overview of what the chain actually does, token launch and airdrop receipts, how you can earn yield and where traders should look to make money. Short and sharp, let's get into it. So if you look at the market snapshot, the price has wild intraday swings. It's been swinging from $0.87 to $1.07. It is back around to the $0.9 to $1.11 range. The market cap sits at $2.4 to $2.8 billion. That's the floating market cap, and the circulating supply for the tokens is that's 1.8 billion XPL token. That is 18% of the 10 billion supply at the mainnet launch. The total value logged sits at almost $5 billion, and it was launched with greater than $2 billion in stablecoin deposits. So you must be wondering, what is Plasma exactly? So Plasma is a purpose-built layer 1 for stablecoins. Think payments rail rather than a generic smart contract playground. It's EVM compatible, ultra fast, 1000 plus transactions per second, less than 1 second block time, zero fee USD transfers. Special gas token and a trustless Bitcoin bridge, and a stablecoin-first user interface. One neobank, cards, remittance, and backing includes major industry thesis. It's got Bitfinex, Twitter Founders Fund, Flow Traders, DRW, and a few others as well. So why should traders be looking, and what's happening with Plasma lately? Why is it the attention of the town? So Plasma launched with a real on-chain activity with product receipts, but the token market is noisy. The network looks like a credible stablecoin rail, while the XPL's token mechanics and launch flow create short to medium-term supply pressure. Here's the compact read. So number one, we've got real liquidity and receipts. So day one stablecoin deposits exceeded $2 billion in total value locked, and activity spiked, transactions, active addresses shot up. Money actually moved on chain, not just social chatter about the token. It's a product that pays. So Plasma 1, which is a neobank plus card, rails are live. So early promo showed greater than 10% in savings offer and 4% cashback on spends. Aave and other DeFi connectors already have sizable deposits, proving composability beyond simple transfers. Number 3, stablecoin first demand flywheel. So Plasma optimizes for USD transfers. It is gasless for simple sense. Every high frequency stablecoin transfer is a recurring economic activity that can translate into gas demand, staking, and protocol utility over time. Next, we've got token launch and market mechanics. So XPL launched mainnet on September 25th with major exchange listings: Binance, OKX, Bybit, almost all the top exchanges, and a Binance hodler airdrop which gave 75 million XPL tokens, and it had public sale allocations as well. So circulating at supply, we had 1.8 billion XPL tokens out of a total of 10 billion XPL tokens. Some social media posts even said that even if you deposit as small as $1, you could get 9,304 XPL tokens. So that was almost close to $10,000, and it is one of the best returns on airdrops so far. It's got a state supply investing, so it's got a multi-quarter overhang. The tokenomics, if we look at it, it's got 40% ecosystem, that is 4 billion tokens, 800 million of those were unlocked at launch. Remainder monthly over 3 years, 25% goes to the team and developers, and 25% goes to backers and partners, subject to a 1-year cliff plus 2-year linear vest. So that is an ongoing supply that would come into the market with the monthly unlocks. If we look at the utility for the XPL token, it is a gas token plus staking asset plus validator rewards. So validator inflation starts near 5% and declines towards 3%. On top of that, Plasma 1 and third-party relent strategies advertise high APYs. Some pools have greater than 30% attractive yields but higher smart contract counterparty risk. So net effect of all of this is fundamentals look strong for long-term protocol utility, but XPL price is currently an event launch date with large initial supply. Airdrop exchange flows and leverage create volatility. Trade small, stake some for yield, and watch unlock cadence and exchange outflows as the proof points that convert utility into durable price support. So now if we look at the technical analysis, these are some analysis that are shared by traders on Twitter and X. Remember, this is not financial advice, and always do your own research and consult a financial advisor before taking any financial decisions. So post airdrop chop, big intraday ranges, heavy leverage and on-chain receipts, treat as an event-driven, size small and use tight stops. If you look at the entry, it's at a tight entry would be at $0.9 to $1.15. A key support sits at $0.82 to $0.88, and the stop loss should be below $0.75 or close below $0.75. Three targets. Number one, we've got $1.31, that is early resistance. Number two, we've got $1.69, that is the previous launch high. And a target 3 would be $2.3, that is a multi-cycle re-rating if adoption and T-Whale sustains and liquidity normalizes. So if stablecoin metrics grow, I think that is the one thing you should be looking at. So for sizing, small initial conviction buys on the retest band, add on evidence, use options futures only with extreme caution. Funding and liquidations are brutal here, so be very careful with that. So what's the verdict? Plasma is a legit product, a stablecoin first L1 with serious backers and real liquidity. That makes XPL a plausible long-term play if you believe on-chain stablecoin will scale globally. Short-term, it's a high volatility launch trade given by airdrops, exchange listings and futures. If you want exposure, consider a hybrid approach, small tactical allocation on 0.9 to 1.15 range with stop at less than $0.75. Stake delegation, a portion for validator yield. Initial is at 5% inflation, then declining, and use Plasma 1 or DeFi yield only if you accept smart contract and custodial risk. That could give you better returns and more yield on your tokens. Long game buyers should model supply unlocks, the monthly ecosystem token unlocks that happen, and potential airdrop selling could also happen. So remember, this is not financial advice. Always do your own research before making any financial decisions. So that's it for today's CoinCheck. Thank you for watching Leader.tv. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you guys again on Friday, and goodbye for now.